Hello viewers, we'll be going over silver futures. In this video, we'll be going over the day-by-day probability model, the technical performance of each model, how we find the models, comparing the current trend with the trend in the past, and we'll go over the day-by-day forecast for silver futures. So back to the technical analysis, silver was up 62 basis points on Friday on the 1 hour chart. We made a slight reversal on the 1 hour MACD. We are now in positive MACD. As for the 4 hour chart, we see a divergence between Thursday and Friday night, and we are resting on the 18 moving average. And if we expand that further onto the daily chart, what we have here is we see a convergence on the daily MACD, and we continue to make higher highs, which is a positive sign that there is still a lot of upward momentum. And at the moment, we have not reached overbought RSI, so there's more room to head up higher. And if we were to fall and reverse lower, the next possible support will be around the price of, say, $18.50. Reason why? We see that level as previous resistance, and since we're above resistance, that will act as our next support. And to the upside, our next resistance will be around $19.46, what we made back in July 9th. And if we do manage to climb higher to hit resistance, that price movement to the upside is roughly around, let's say, 60 basis points. And to downside to hit support, that price movement is roughly around 2.8%. And now let's head to the day-by-day probability model. And these models are now available in the link below, so do check it out. As we progress to the 7th day, we have a 14% chance for silver to climb higher between 5 to 10%. And to the downside, we have a 71% chance for silver to fall between 0 to negative 5%. And on the extreme case to the downside, we have a 14% chance for silver to fall between negative 5% to negative 10%. So let's examine the day-by-day forecast for silver futures. So as we progress to 1 day out, that will be a Monday, and 2 days out will be a Tuesday, and so on. So we have 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these models we should focus on? Ideally, the model that is best matched to the current trend. The blue lines are current trend, and overlapping it happens to be the best match. So right here we have our current trend, and below is the trend that we found on the line graph above. And let's begin comparing the both trends. One thing to note, this trend dates back to December 15, 2011 to March 14, 2012. And let's start comparing both of the trends. So on the current trend, we start off at the bottom Bollinger Band, and then we proceed to average above the middle Bollinger Band. And then next we proceeded to drift lower, nearing the bottom band, and then towards the very end, we reverse on higher to touch the upper band. And now in the trend in question, we start off at the bottom Bollinger Band, average above the middle Bollinger Band, and then proceeded to dip lower, nearing the bottom band, and then towards the very end, we touch the upper band. So what we have here is 1, 2, 3, 4 points, and we also have 1, 2, 3, 4 points on the current trend. So there's a reason to believe that the trends and patterns are somewhat the same. The outcome and forecast should be fairly same. So the model that we just examined, again, was back in December 15, 2011 to March 14, 2012. Back then, silver was down roughly around, say, 23 basis points, so slightly to the downside. If we head back to the day-by-day probability model, that coincides with this standard deviation of 71% chance for silver to fall between 0 to 5%. And if we examine closer on the technical performance of each model, on the current trend that we're in, we're down 34 basis points from monthly high, up 21% from monthly low, up 2.4% from 10 simple moving average, up 4% from 20-day simple moving average, and up 9% from 50-day simple moving average. Compare that to the trend that we just found. Again, it was December 15, 2011 to March 14, 2012. Back then, it was down 14% from monthly high, up 16% from monthly low, down 4% from 10 simple moving average, down 16% or down 6% from 20-day simple moving average, and down 2% from 50-day simple moving average. And there are technical differences among the two trends. One is the distance away from the monthly high. Compare that to the current trend, only down 34 basis points, with the trend in the past 14% away from monthly high, and also the down 4%, compare that to up 2% down 6%, compare that to 4%, and down 2%, compare that to up 9% on the current trend. So do take that in consideration. Again, these models are now available in the link below, so do check it out. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.